Hello everyone, this is Juan Sarmiento and today is Friday, November the 12th. I didn't find anything new, and perhaps it's a good idea because the volatility has increased, and when the volatility increases we have to be cautious. It may continue to increase and or it may go down again, and it looks like it's going down for the time being. So we wait until it comes down, then we look for new trades. For the time being, we are going to manage what we have. Okay, I have quite a few trades here, so I'm going to organize them alphabetically and see what I need to do. Start with Apple. Take a quick look at the chart if you want. It looks like it's going down a little bit more, perhaps, but it might find support. Who knows? It's going laterally, I would say. Let's go and take a look at the Analyze tab. And here is our trade. And we have expiration here in November. Is that a week? 7 days. Okay, so the expiration of the long side is January. So here we can close the position or simply take a rollover. We do a rollover and reduce our deltas perhaps. Okay, so we are here at 150 and our strike price is 55. So we can simply roll over both calls and puts. Okay, if there was more of a distance, you can do only the calls or only the puts. But we're fairly close, so we are going to select both and say Analyze. Right click, okay? You need to right click and then say Analyze Rolling. And then select a double diagonal that switches the November to 19 to November 26, I think. Okay, and here now we change that. We want this to be a month or so ahead. And what would that be? Well, December the 10th or the 17th. Okay, well, let's see which one would be better. Well, 10th or the 17th. Create a new trade and then just say 17th. There you go. And of course you get more money from the 17th one. But look at the volatility. Yeah, it's pretty even. Okay. All right. I'd say let's save our time and do the 17th. There you go. And this is what we get, a negative 11. Okay. You can roll down a put, but I'm not going to do that. We're close enough so that a movement in either direction would be productive, I think. So let's create duplicate, confirm and send. And we're going to get $334 credit for that trade. And it filled very quickly. Usually with Apple or some liquid stock like that, it should be no problem to get that. Let's go to ABTH. Okay, here again we have, since the opening, a bit of a profit on that one. Okay, and here we're going to do the same. November the 19th, that's a week from now. Analyze rolling, and you can say December the 10th or the 17th. I don't have any problem with either one of those. Look at the short side. 2019 is a little higher here. No, it's about the same in either way. And I see that the December 19 is a little less. Okay, let's do the 17. I think that's pretty okay. When you do that, look at the delta here in the middle of your field, right there where my arrow is pointing, is 70 with the trade. Without it, it's negative. So we're not only neutralizing, we're going positive on it, and I think it's okay because the stock is bouncing back from a bit of a pullback. Okay, let's do that. Okay, let's move on to COP. Oh, there you go, filled. All right, And as we do that, of course, we're going to get a little cash available for our trading going further. Okay, let's COP. This is, I already took some profit by selling calls. Let's take a look at the chart here on COP, ConocoPhillips. It's been going down. It looks like it might be going down some more. Okay, let's take a look at the monitor tab, account statement, and then you would see your trades on COP. Okay, trade history should show up sometime soon. Okay, here you have the puts that the calls that we have sold somewhere here. Okay, what we saw were the January calls. You see you have 8 when it should have been 10. So let's take a look at the January 1 here. We can copy it by just right-clicking and say analyze trade, and here it is. Okay, we already did that. I'm just wanted to check this another one here. What kind of a price we got for those? And so we got this as a credit. We could buy them back if you wanted. I don't know if I'm going to do that, but I'm just analyze opposite and then unlock it. And essentially I sold them at 10.65 on average, and now it's 8.45. So we're getting $2 on the deal. Or you can just let it be, okay, and await a better time for that. Okay, so you can see that it's a little bit of a bias to the negative side. Okay, it will get a little better when we do the rollover. Once again, we go to December the 17th, and look at that, it turns positive. And sort of, I want to do that. Remember, I told you before that what we want to do is be a little on the positive, delta positive, because if the stock goes down, volatility tends to increase, and that is profitable. If the stock goes up, volatility would decrease, and the volatility will work a little against us. So having this delta positive is not a bad thing. Okay, so as long as you keep it close to neutrality, not too close, not too, less than 100, let's say 30, 40 is perfectly fine. So I'm going to do my rollover, and that gives me how much back? Create duplicate. How much am I getting back? Well, 1.18 times 500. That's what it is. So I get $590, and minus my commissions, $13. There, filled. So that gives me plenty of cash that I can. You can still sell a call here if you wanted to go down on the. Let's take a look at the chart. Do I think it's going down? Yeah, it's going to go down, but it could bounce back strongly from the Ichimoku cloud. And it's been going a little bit already, so I'm not going to take any chances. Just going to leave it here. Okay, let's move on to CRM. And this stock, I think, is going to report earnings. It's very delta neutral, which is good. Let's take a look at the chart. Okay, earnings will come on the 30th. Okay, so we're getting closer. Again, we still have plenty of time for that, before next week, after next week. So November the 26th. Okay, so we're going to do something next week. Right now, we don't need to. The stocks tend to settle down a little bit before earnings, and then on earnings, they take a move either way. Let's take a look at the symbol here, so we can see how much money we have. The market value on CRM in our position is 2,600. So we have already taken our profits, so we can pretty much leave that alone. That's how much you're risking. Okay, you're not going to run out of money, but a declining volatility could affect you. And when that happens, we have January versus November. Okay? And you can see that it's very close to delta neutrality, so a move in either direction may be favorable even with the volatility decline. We'll see. Okay? Let's move on to LOW, lows. Same thing here. We are pretty much in a delta neutral position. We don't care if it goes up and down. We have taken profits. That's why it looks so weird. Okay. Let's take a look at the chart. So when the stock was going up, I was taking profits. But now here is due for earnings on the 17th before the market. So that's sometime next week. Okay. And let's take a look at the amount of money in the trade. Right here you see 1,785. Again, it's relatively low risk here. We're not putting that much money. But look at the shape of this thing. A big move in either direction could be quite profitable without much investment. Pot odds are large here. Small investment, potentially great return. That's what we want. Let's say the market collapses for whatever reason. All these trades will be spiking in volatility and big things could happen. So we don't want to, remove them when these things happen. So I want to leave my delta negative or whatever delta neutral thing happening here. Give it the opportunity for a big chunk of profit if something happens. But how about it tomorrow somebody say, oh, we're buying Lowe's, let's say Home Depot is buying Lowe's for $280. Well, suddenly we have big profits too. Okay? So I want you to keep that option open, that possibility in your mind. Let's move on to Oracle. I'm not going to do anything because this is November 26th. Next week we'll have the earnings and then we can make the move. Okay. Let's move on to Oracle. December 10th, that's already being corrected, obviously. So I'm not going to touch that. Again, close to delta neutrality. Is it going down? Yeah, Oracle has been going down, but I suspect that it's going to find that bottom here at the edge of the Ichimoku cloud. So we can still have the option to. You can always sell a put here. Sell one of the ones we already have, just to neutralize my delta. If you sell one, this is what you get. It's more of a delta positive. I think it's too strong right now. We'll look at it again next week, okay? Let's move on to SPG. Okay, in this case, you see the focus on the center line here. That is the current price. The current stock price, 164.60. Okay, and we are collecting theta gains. My theta is neutral here. Vega is strong as usual. And these are December the 17th. We already have the rollover. We probably did it before or bought. No, this is probably already bought in this shape, so we don't need to change anything. Let's move on to TER. Okay, here we have November the 19th. That's next week for TER. Let's take a look at the monitor tab. And if you want, you can go back 300 days and then look at the trade history. This is the original trade. We haven't done any rollovers. And that's what we have here already. So we don't need to do anything. This is the current trade. Okay? And so whatever you see here is how much cash we have made, how much money we have made on this trade. Exactly. No need to adjust anything. Okay. Let's do the rollover. It's close to 135. You can do the call side alone because it's 10 points ahead. Okay, let me just show you how to do that. You simply select the short call and say analyze rolling. and then you set December the 17th. This is how much credit you get. This is what your trade looks like. Okay. Or you can do the put as well. There you go. This is the two trades. Okay. Or you can do them together. Excellent. So you get, with the two together, you get $4.32, or $432 times 2, $864 credit. Okay, and this is what the resulting trade will look like. Okay? If you want, this is not real because it says 1 to expiration. So let's say 2 to expiration. Okay, so you see another color here. That's kind of faint. It's kind of faint here. I don't know why. I don't know if I can correct that. I have to look into that. But I can see my smiley face, my typical shape here, cone shape here. That's what it really would look like once the rollover happens. And I sort of like it. Okay, it's close enough. If we did only the call side, then it looks a little biased to the upside. So let's do the two sides. You know, this is why it's important to have a chart, risk graphic, because then you can make decisions visually. I'm a very visual person, so I don't know about you, but it makes sense to me to see a picture like that. Okay, let's move on to UPS. And let's back to 1 to expiration. And it says here December the 3rd, March the 18th. So I don't think we need to change anything. We have very little profits here, 10. Let's go to the monitor tab, account statement. And this, yeah, it's a brand new trade. Obviously, I traded it before. If you want to see how much money we have made so far this year on that trade, here it is. Okay, and it says year to date, we have lost money, $783. Okay, so perhaps we'll make it up. Right now, the trade is $400 invested. I'm going to leave it like that. December the 3rd, plenty of time for that to work. WFC, that's Wells Fargo. It's a weird trade. Oh, you see I have less shorts here on the put side. It's a little negative. Let's look at the chart. Okay, I want to neutralize it again so you can sell puts again. You say analyze closing, but then you're going to modify it. See? There, and I'm going to get 110. I had sold, I don't know what I bought it back, bought back some puts. No, I sold calls is what I did. Okay, let's see what I had done. Let's go to the monitor tab. Okay, I did a rollover in which I sold more calls than puts. I can neutralize that again by buying back 2 of these calls. And I will be paying $1.91 versus the $2.56 that I sold them for. And if I do 2 of those, buy them back, then I get back my typical shape here. You can also, I said, well, what's the point in doing that? Well, it's just to get it back to a positive shape. It's now negative. Well, how about if we did only 1? Then it's more delta neutral, so I'd rather do that. It's just 1, buying 1 back. And I'm buying it back for a lesser price. So every time you can do that, you're fine. Okay, so we have 11. and that means we took a little bit of a profit, and that's all there is to it. It's more delta neutral now. If stock keeps going up, it might make me money, but if it goes down with an increase in volatility, it's even better. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.